Bitcoin just lost a critical level. One company quietly bought 4.4 million Ethereum tokens, and an XRP analyst is making a prediction that sounds insane until you look at the data. Welcome back to Crypto Insight Hub. Today's market is not normal, and if you don't know what's happening right now, you are going to be completely blindsided. Let's get into it.
Let's start with the number everyone's watching. Bitcoin dropped below $63,000, touching a low of around $62,964 at its worst point in the past 24 hours. It has clawed back some of those losses and is hovering around 63,200 or so as of this morning. But make no mistake, the mood in the market is not good right now. So what's actually driving this? Two words: Trump tariffs. On February 23rd, the Trump administration invoked Section 122 of the Trade Act of 1974 to impose a 15% global tariff on a wide range of imported goods. This sent shockwaves through financial markets almost immediately. Investors started rotating hard out of risk assets, and Bitcoin, which has increasingly been trading in lockstep with tech stocks and other speculative assets, felt the hit immediately. Now here's the thing that makes this even more interesting. Just 5 days earlier, on February 20th, the US Supreme Court actually struck down the Trump administration's previous tariff regime in a 6-3 decision. Bitcoin popped about 2% on that news, briefly touching above $68,000, but those gains evaporated within minutes. And then the administration came back with an entirely new tariff framework days later. So what looked like a relief rally turned into a bull trap. Classic. The reaction from analysts has been pretty telling. Christopher Hamilton at Invesco called this move a classic risk sentiment reset, rather than a crypto-specific shock. In plain English, he's saying Bitcoin isn't falling because something broke inside crypto, it's falling because the whole macro environment has turned risk off. Billy Lang at Global X Australia put it even more bluntly, saying Bitcoin is highly sensitive to global liquidity conditions, and if markets read trade policy as tightening those conditions, crypto is going to feel it first.
And the data backs that up. While Bitcoin has been falling, gold is rising. Spot gold is now trading around $5,172 per ounce, up over 1%, as investors flee to the classic safe haven. This is the exact kind of rotation we've seen in past macro crises, and right now Bitcoin is very clearly not being treated as digital gold. It's being treated as a risk asset, full stop. Let's put this in context. Bitcoin hit an all-time high of over $125,000 back in October of last year. It is now down roughly 50% from that peak, and down about 27% just since the start of 2026. That's a brutal drawdown, and February 2026 is shaping up to be the worst monthly performance since November 2022, the month when FTX collapsed, and the entire industry was on the edge of a cliff. Except this time, the damage isn't coming from inside the house, it's coming from the outside, from geopolitics and macroeconomic policy. Some analysts are pointing to $60,000 as the critical psychological floor for Bitcoin in the near term. If that level breaks and selling accelerates, some models are projecting a potential revisit of $50,000. That would be painful. But on the flip side, extreme oversold conditions historically tend to precede sharp relief rallies, and the 60,000 level has already been tested once before, back in early February, and held. Bulls are counting on it holding again. One more thing worth noting here. Trading volume surged 25% on Tuesday as investors reacted to the confluence of events. That's a lot of activity, and elevated volume during a sell-off can sometimes indicate capitulation, the point at which weak hands throw in the towel and stronger hands start accumulating. Whether that's what's happening right now is the million-dollar question. or I guess in this market, the $60,000 question. Ethereum is not doing any better. ETH dropped about 1.6%, hitting around $1,826 at its lowest point. Solana, XRP, and Avalanche got hit even harder. Those altcoins dropped somewhere between 6 and 9% in the sharpest moments of the sell-off. Now, Ethereum has a very specific story playing out beneath the surface that we need to talk about because it connects directly to our next major story. Despite the price weakness, Ethereum on-chain activity is actually at record highs. Daily transactions hit an all-time high of 2.5 million. Active addresses are also at an all-time high of 1 million per day. In other words, people are using Ethereum more than they ever have, but the price doesn't reflect that. This is the kind of fundamental versus price disconnect that tends to resolve itself, eventually. And there is one massive institutional player that has been betting on exactly that. This is one of the most fascinating stories in crypto right now. Bitmine Immersion Technologies, ticker BMNR, just announced that its Ethereum holdings have now reached 4.423 million ETH tokens. That's not a typo, 4.4 million ETH. Their total crypto holdings, combined with cash and other investments, stand at $9.6 billion. To put that number in perspective, Bitmine now owns 3.66% of the entire Ethereum supply. The entire circulating supply of ETH is about 120.7 million tokens. Bitmine owns 3.66% of it. Their internal goal, what they call the alchemy of 5%, is to reach 5% of total ETH supply. They are 73% of the way there in just 7 months. This is the Ethereum equivalent of what Strategy Incorporated, formerly known as MicroStrategy, has done with Bitcoin. Speaking of which, Strategy still holds 717,131 Bitcoin, worth approximately $49 billion. Bitmine is number 2 globally as a crypto treasury, right behind them. What makes this even more interesting is the team behind it. Bitmine's chairman is Thomas Lee, the well-known FundStrat founder who has been one of the most consistently bullish voices on crypto. Backing Bitmine are some of the biggest names in finance and crypto: ARK's Cathie Wood, Founders Fund, Pantera Capital, Galaxy Digital, Kraken, and Digital Currency Group, among others. Tom Lee's message in the middle of this downturn has been unwavering. He said that in the midst of this mini crypto winter, the company's focus is on methodically executing their treasury strategy and steadily acquiring ETH. He believes non-fundamental factors like leverage unwinding from October's market shock and gold acting as a vortex pulling risk appetite away from crypto are responsible for ETH's price weakness, not anything broken in the underlying protocol. And here's the kicker. Bitmine currently has 3.04 million of their ETH staked. That's generating annualized staking revenue of around $202 million. That's over $1 million per day, just from staking yields. Their in-house staking infrastructure, called Maven, Made in America Validator Network, is on track to launch in Q1 of 2026, which means the yield machine is only going to get more efficient. When you see institutions of this caliber buying aggressively during a downturn, that is worth paying attention to. Whether you agree with their thesis or not, this level of conviction backed by this level of capital is a signal. Now, let's talk about XRP, because there's an analysis making the rounds today that is generating a lot of discussion, and I want to break it down for you so you can decide what you think. Analyst Dark Defender has put forward a theory that XRP's next major move could coincide with a historic collapse in Bitcoin's market dominance. Here's the framework. Back in 2017, Bitcoin's market dominance dropped sharply, falling from around 95% in February of 2017 all the way down to 37% by January of 2018. As that happened, capital rotated massively out of Bitcoin and into altcoins. XRP was one of the biggest beneficiaries of that rotation. Its price surged over 70,000%, going from less than a cent to its all-time high of $3.84. Now, Dark Defender is suggesting that a similar setup may be forming again. He sees a potential multi-wave decline in BTC dominance unfolding over the course of 2026, and he believes XRP is positioned to be one of the major beneficiaries when that rotation happens. What's important to note here is that XRP has already had a significant run in this cycle. It moved from 49 cents all the way up to $3.66, a gain of over 600%. But here's the thing, during that first leg, Bitcoin's dominance didn't fall dramatically. The argument is that the real altcoin season, the one where capital rotates out of Bitcoin in a major way, hasn't fully happened yet. If and when it does, analysts like Dark Defender believe XRP could be in position for a second, even more explosive leg. Now, I want to be clear, this is not financial advice, and these kinds of historical comparisons don't always play out the way analysts expect. Every cycle is different. But the structural argument here, that a drop in BTC dominance tends to fuel altcoin rallies, is well supported by historical data. It's a pattern worth understanding, even if the timing is always uncertain.
Let's quickly touch on Strategy Incorporated, the company formerly known as MicroStrategy, because what's happening there right now is a major story on its own. Strategy holds 717,000 Bitcoin, and under the new FASB fair value accounting rules, they are required to mark those holdings to market prices in real time. That means every time Bitcoin drops, Strategy's balance sheet takes an immediate hit in real time. Not quarterly, not annually, but in real time. Here's the most striking part of this story. The MSTR premium has completely collapsed. For a long time, investors were willing to pay a significant premium to buy Strategy stock, at one point paying 2 times the net asset value of the underlying Bitcoin holdings. The idea was that Michael Saylor's ability to raise cheap capital and pile into Bitcoin was worth paying extra for. But right now, that premium has essentially gone to zero. You can buy Strategy stock and get roughly a 1-to-1 equivalent exposure to Bitcoin. No premium, no discount. That's a remarkable shift in how the market is valuing the company. Meanwhile, Coinbase's stock dropped 8% in recent trading as the broader crypto downturn hit crypto-adjacent stocks hard. Other names like Robinhood fell 4.5%, and Block dropped 5% as the risk-off wave rippled through.
Let me zoom out for a second and give you the bigger picture, because I think context really matters right now. The crypto market is not falling because of anything fundamentally broken inside crypto. This is not an FTX moment. It is not a Three Arrows Capital moment. Those were internal implosions caused by fraud and over-leveraged firms. What we're dealing with now is external, a macro environment that has turned hostile to risk assets. Tariffs, potential geopolitical conflict involving Iran, stagflationary economic data showing the U.S. economy growing at just 1.4% in the final quarter of 2025, while inflation ran hotter than expected at 3%. All of that is creating a risk-off environment where speculative assets like crypto take the hit first. The good news, if you want to find a silver lining, is that this kind of externally driven correction tends to be more recoverable than internally driven crashes. When FTX fell, the trust in the entire industry was shaken at a fundamental level. That took years to rebuild. A macro-driven correction, by contrast, tends to reverse when the macro environment shifts. If tariffs get walked back, if the geopolitical situation de-escalates, if the Fed signals a pivot, any one of those could be a catalyst for a rapid recovery. The bad news is that nobody knows when those things will happen. The tariff situation is fluid, the geopolitical situation is volatile, and the Fed is in a tough spot because inflation is still running hot while growth is slowing. That's not a great combo for risk assets in the short term. For Bitcoin specifically, the $60,000 level remains the critical line in the sand that bulls need to defend. The $70,000 level is the key resistance that needs to be broken to the upside to signal any kind of recovery is underway.
So here's where we are heading into the rest of the week. Bitcoin is down hard, sitting around $63,000, off 50% from its all-time high. Ethereum is struggling around the $1,800 range. Altcoins are bleeding. Gold is up. The macro environment is as uncertain as it's been in months. At the same time, institutional players like Bitmine are buying aggressively. Smart money is watching the $60,000 support level on Bitcoin like a hawk. XRP analysts are watching Bitcoin dominance for signs of a major rotation, and the broader crypto infrastructure, on-chain activity, transactions, active users, continues to grow even while prices fall. Is this the bottom? Nobody knows, but what I will say is this: the biggest opportunities in crypto have historically shown up in moments exactly like this one, when the headlines are bad, when prices are down, and when most people are scared. That's not a call to action, that's just history. Do your own research, manage your risk, never invest more than you can afford to lose. If you found today's update valuable, hit that like button, subscribe to Crypto Insight Hub if you haven't already, and turn on notifications so you never miss a daily breakdown. Drop a comment below. I want to know what you're watching right now and what you think happens next with Bitcoin. I read every single comment. Stay sharp out there. I'll see you in the next one.